If you think you have a handle on where gold and silver prices are headed, you might want to think again. The old rulebook is officially out the window. As we stand here in late 2025, the world's biggest financial institutions aren't just tweaking their forecasts, they're scrambling to keep up with a market moving with more force than anyone saw coming. They're releasing their official 2025 and 2026 price targets, and some of the numbers would have sounded impossible just a year ago. We're talking about potential all time highs that could fundamentally change the value of your savings. In this video, we're pulling back the curtain on the key numbers from the biggest names on Wall Street. We'll break down their exact forecasts and, more importantly, explain what's happening behind the scenes to fuel this historic surge. Stick around to hear their exact numbers. It's no secret that the financial ground feels like it's shifting under our feet. For years, the story was that inflation was transitory, yet the cost of everything keeps climbing, chewing away at our purchasing power. Your savings are worth less today than they were yesterday, and they'll likely be worth even less tomorrow. That's not a feeling. It's just math in the current environment. This anxiety is getting amplified by a world that seems to be fracturing. Geopolitical tensions aren't just simmering anymore, they're boiling over and sending shockwaves through global markets. At the same time, a quiet rebellion is happening in the bedrock of global finance, the move away from the US dollar. This isn't some fringe theory, it's a documented strategy being put into action by major central banks who are actively looking for alternatives. For the average person, this is a deeply unsettling time. The old advice to just park your money in stocks and bonds can feel inadequate, if not reckless, when faced with these kinds of challenges. Your wealth and your family's financial future are exposed to these powerful, unpredictable forces. And it's in this chaotic environment that gold and silver haven't just woken up, they've started to erupt. Let's start with gold. The story of 2025 has been its relentless climb. After breaking through the $3,000 level earlier in the year, the price has been on a tear. As of October 2025, gold has been flirting with highs that have shattered previous records, making it one of the best performing assets on the planet. This isn't just another rally, it's a statement. The price action has been so strong that it has caught most seasoned analysts off guard. So, where do the big banks see it going from here? Let's dig into the new 2025 and 2026 price targets. First up is JP Morgan. They've been consistently bullish, and their latest forecast sees gold averaging a strong $3,275 per ounce by the last quarter of 2025. But they don't think the momentum stops there, calling for a continued climb toward $4,000 by the middle of 2026. Next, let's look at Goldman Sachs, a major voice in commodities. Their analysts have been raising their targets repeatedly, with their base case now pointing to a mid 2026 price of $4,000 per ounce. But here's the kicker. In a move that sent ripples through the market, Goldman also issued one of the most aggressive forecasts on Wall Street, raising their December 2026 price target to a stunning $4,900 per ounce. Let me say that again. $4,900 gold. That would be another significant jump from today's already high prices. This bullish sentiment is being echoed across the board. Bank of America is now forecasting a trading band of $3,800 to $4,000. ING, a major European bank, projects gold could average around $4,150 in 2026. Even HSBC, which had a more conservative outlook, sees gold strengthening significantly. The consensus is clear. The most powerful financial institutions in the world believe gold's historic run is far from over. So, what's actually fueling this incredible rally? It's not random speculation. This move is built on three powerful pillars. First, and this is the big one, is the unprecedented buying from the world's central banks. For two consecutive years, 2022 and 2023, central banks bought over 1,000 tons of gold each year, a pace of accumulation not seen in modern history. That trend has continued with incredible force through 2024 and into 2025, with central banks adding another 290 tons in the first quarter of this year alone. Why are they doing this? It's a conscious strategic pivot away from the US dollar. They see the risks on the horizon and are turning to the one asset that has preserved wealth for 5,000 years. This massive institutional demand is creating a solid floor under the price of gold. The second pillar is the return of the Western investor. For a couple of years, as interest rates were rising, many were drawn to assets paying a yield, but now the tide is turning. As fears of market volatility grow, investors are moving back into the perceived safety of gold, with flows into gold-backed ETFs showing renewed strength. The fear of missing out is being replaced by the fear of being wiped out. The third pillar is the expected shift from the US Federal Reserve. The growing consensus is that the Fed's rate hiking cycle is over and that the next next move will be to cut. When interest rates fall, holding a non yielding asset like gold becomes instantly more attractive. The market is already pricing in these cuts, anticipating a future where holding cash becomes less and less appealing compared to the timeless security of gold. If gold's performance has been impressive, silver's has been downright explosive. Often called gold on steroids, silver has lived up to its reputation in 2025, dramatically outperforming gold in percentage terms. The white metal has had a blistering rally that has taken it to levels not seen in years. The most significant development is that silver is now challenging the psychological $50 per ounce level, a ceiling it briefly hit in 1980 and 2011 before getting smacked down. This time feels different. The sustained pressure on this level signals that a new era for silver may have finally begun. Just like with gold, this move has forced the big banks to tear up their old forecasts and issue shocking new ones. For instance, major institutions like Citigroup and JP Morgan initially set targets in the $38 to $40 range for 2025. Those forecasts have been challenged by the market's powerful surge. Now, analysts are racing to catch up. HSBC, in a stunning revision, dramatically increased its outlook. They now have raised their 2026 forecast by over 30% to an incredible $44.50 per ounce. More importantly, for the rest of 2025, HSBC anticipates silver will trade in a wide and volatile range of $45 to $53 per ounce, acknowledging the explosive new market reality. Other analysts are even more bullish. The team at Investing Haven sees silver trading in a range of $48 to over $50 for 2025. But one of the most eye-watering predictions comes from MK Wealth Management, who believe that based on current momentum, silver could surge to as high as $60 per ounce within the next year. The message is undeniable. The shackles may finally be coming off for silver. We've just gone through a dizzying array of numbers from Wall Street's biggest banks, and the targets just keep getting higher. So let me ask you directly, what do you think is more realistic for 2026? Goldman Sachs' target of $4,900 gold or MK's call for $60 silver? Let me know which one you think hits first in the comments below. And if you're getting value from this breakdown, do me a favor and hit that subscribe button and the notification bell so you don't miss our future updates. So why has silver's rally been so much more violent than even gold's? The answer lies in its unique dual identity. It's both a monetary metal and a critical industrial commodity. Right now, both sides of that equation are on fire. The single biggest factor is a massive and deepening structural supply deficit. For several consecutive years, the world has been using far more silver than it produces. The numbers are staggering. Global annual demand is running at approximately 1.2 billion ounces, but mine supply is only providing about 850 million ounces. Even with recycling, there's a huge shortfall that has to be filled by draining existing inventories. The cumulative deficit from just the last few years is approaching 500 million ounces. The world is literally running out of available silver. What makes this so explosive is that silver supply is highly inelastic. This is a critical point. Unlike other commodities, you can't just produce more silver when the price goes up. That's because over 70% of the world's silver is a byproduct of mining for other metals like copper, lead, and zinc. You can't just flip a switch for more silver. You have to build entirely new mines for other metals, which can take a decade or more. And that demand is exploding, especially from industrial uses. You could say the green energy transition is also a silver transition. Solar panels are incredibly silver intensive, and demand from that sector has quadrupled since 2015. Electric vehicles use significantly more silver than traditional cars. The rollout of 5G and the ever-growing number of electronics in our lives all depend on silver. This industrial demand now accounts for well over half of all silver consumption, creating a voracious, non-negotiable pull on an already dwindling supply. Now let's pump the brakes for a reality check. In any market that moves this far, this fast, there are always risks. For both gold and silver, the most immediate risk is their own success. Prices are near multi-year or all-time highs, and some technical indicators suggest the market is overbought. A correction or a pullback of 10 to 15% would be perfectly normal, even healthy as traders take profits. No market goes up in a straight line. The second major risk is a big shift in the economy. A strong, unexpected comeback for the US dollar would be a headwind. A sudden, lasting resolution to major geopolitical conflicts could also cool off the safe haven demand. And if central banks, especially the Fed, were to reverse course and get more aggressive with even higher interest rates, that could trigger a significant sell-off. For silver specifically, its greatest strength, its volatility, is also its greatest risk. The same leverage that produces breathtaking gains can work in reverse. When silver corrects, it can be swift and brutal. It's definitely not an investment for the faint of heart. While the long term fundamentals look incredibly strong, the path to higher prices will almost certainly be volatile. We've covered the official forecasts from the big banks, which are already calling for new all time highs. But there's another set of predictions out there, the moonshot calls. These come from analysts who believe we're at the beginning of a complete paradigm shift in the global monetary system. Let's start with gold. While banks are talking about prices approaching $5,000, some long term analysts believe that's just the next stop. Forecasts of $6,000 to $10,000 an ounce within the next decade are becoming more common based on the idea that de-dollarization will accelerate. But the most extreme forecast comes from economist Peter Schiff. He argues that the world's financial system is built on an unsustainable mountain of debt. In a scenario where the current monetary system fails, he believes gold will reassert its role as the ultimate measure of value, with a potential price target in a hyperinflationary environment of an astonishing $100,000 per ounce. To be clear, this is not a forecast for 2025, it's a forecast for a world in crisis. For silver, the outlier predictions are just as staggering. Given the extreme supply deficit, some experts believe the price is destined for a massive upward move. Marco Byrne of Terra Coins has suggested silver could reach $100 to $150 per ounce in the next 3 to 5 years. The CEO of First Majestic Silver, one of the world's largest silver miners, has gone on record with a long term forecast between $100 and $130, based purely on the supply and demand imbalance. So, what does this all mean for you? We've seen that the world's most powerful banks are now forecasting prices for gold and silver that would have been unthinkable not long ago. The consensus view is clear. Gold is pushing towards $4,000 and beyond, and silver has shattered key resistance levels with the iconic $50 barrier in its sights. The drivers are powerful. For gold, it's a story of a global monetary reset, with central banks losing faith in fiat currencies. For silver, it's a perfect storm. It gets all the same monetary benefits as gold, but is supercharged by an industrial demand squeeze in a market that's in a deep structural deficit. While the journey will be volatile, the fundamental case for precious metals appears stronger than it has been in generations. The real question to ask yourself is this: are we just watching another bull market, or are we witnessing the beginning of a fundamental, once in a century repricing of money itself? Let me know your final thoughts in the comments. Thanks for watching.